Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this important Wednesday, the 1st of March, 2017, about 2:30 p.m. Central Standard Time. All right. We still have that situation going where the silver market continues to gain on the gold. The big performer today, and I think you realize that's all these record numbers that you're seeing in the stock market, and like it, hate them, President Trump delivered a presidential speech last night that the market loves. And you can't argue that because bonds and notes are adding quite a few basis points to them right now. The market has now changed gears, and all of a sudden we have almost a 70% probability, in fact, that there'll be a rate hike in March. And that's a complete change from just 2 weeks ago when it was under 30%. So you've seen a big shift there that's boosted the dollar, and in turn, it's put pressure on the gold and the silver market, and of course the platinum. The copper market's in its own world because it's got to look at the marketplace and say, okay, I've got a strike in Escondida mine, I got the Glassberg situation, 10% of the world supply coming to a grinding halt, if you will, at this point, and higher interest rates, and yet I'm doing okay. So a little different world. In the gold market on a weekly charts, this market still looks fine. The market has got a pattern of higher lows, higher highs. Yes, for the week it is down $7.50 and should have taken out $12.1730, which is almost $30 away. That could be the problem for the market. Even then, I'd make an argument that it's likely to just go down to support against the 1203, 1201 level and have to figure out what it's going to do from there. But I don't see that happening yet. I see on a daily area chart of closes, we're down $4.50. The market peaked out on the recent rally at 1258.80 and has been sliding back a little bit. And you see that right here with now 2 days in a row where the market has fallen back. But when I put the swing line on this, I still get to the point where the market's got higher lows and higher highs. It is bullish in terms of just the raw action until you take out 1226.80. When I add the 18-day average of closes, for those of you that get my newsletter, I've been writing around, and I mentioned it. I said this 18-day average should offer formidable support. It fell down to it. That's the 18-day average of closes right there in red. Held it. If it gives ground, remember that number we were just talking, coming back over here, and 1217.30? Well, take a look also on this chart, 1219.10 at the 100-day average. So there's a lot of stuff that comes together between literally right here and down to that 1219 level. When we come to Bollinger Bands, I can argue left and right that you got to the Bollinger Band top, challenged it 3 times, fell back now to the 18-day average to regroup, and you are still very much in a bullish overall trend. But with the loss of the embedded reading, the odds are that you need to do some more work here. Now, do you just stay overbought or do you correct down further? I can't answer that. Why? Normally, when you lose that reading, you go to the 18-day average of closes, the red line. You've already done it. But the market often in that process loses being overbought. Hasn't done that here. In the gold ETF, it's the same pattern. The loss of the embedded reading, the pullback to the 18-day average, and just sort of sitting now trying to figure out what to do next. But the opposite is true in the gold miners, which came down, got underneath everything. And remember what I said. It's going to be actually between the 100-day average in green and the lower Bollinger Band, and the market is trying to find its leggings, its foot, its whatever you want to call it, get itself held together under there. That doesn't mean it's a buy. The market is still very much on the miners, in a bear trend, but an oversold where I think the pros are taking their shorts off right here. The gold-silver ratio, this is a new low on this move, okay? Now the question is, does it get under 67.52. Intraday it did, but I don't know where it's going to actually finish today up on the settlement. I didn't look yet. But you're back to this old area. So at 67, 69, you've been knocking on the door. And one of the areas we've been very right on is saying we've been in a down thrust and calling that where silver's gaining on gold. By the way, on this, remember, the lower numbers represent the amount of silver you'd have to take as an ounce to get 1 ounce of gold. And the lower it goes means the silver's become worth more money. On the silver chart itself, pretty good action. You got the embedded reading. You're not even falling to that 18-day average. You got the pattern of higher lows, higher highs. Everything's still bullish there. When you come to the silver ETF, you're holding together the embedded reading. That did very well. It's riding the upper Bollinger Band. It's all bullish. There's nothing bearish there. When you get to the copper now, and I said it yesterday, copper yesterday turned the corner. It had the pattern of higher lows, higher highs. It turned bullish because it closed over the 18-day average of closes, and you're getting a bit of follow-through right now. Will you be able to get up to the upper Bollinger Band? Don't know. The battleground is pretty clear. It's the 18-day average of closes, and until you take out 266.75, the bulls have wrestled control of the market. In the platinum market, you're just pulling back down towards this the 18-day average of closes. Momentum has been pointing down. You've gotten rid of an overbought condition because the readings are now in the 60s, and the market failed just where I teach. The 18-day average pulling back to the upper Bollinger Band pulling back to the 18-day average, but the trend up. No longer overbought until you take out right through here the 997 area. This still looks quite bullish to me. In the palladium, you got nothing. It just keeps hanging at the 18-day average. Look at that every single day. Got to wait for it to say which way it wants to break out. Now, the longer it's doing this, it's pulling in its Bollinger Bands because the formula is based on a certain amount of volatility that it's losing. The March dollar index, finally today, I've been saying it looks bullish still. I don't like the pattern personally of lower highs and higher lows, but it has stayed over the 18-day average, and the patterns came out of higher lows and higher highs. Then it started faltering, and that's that wavering. But it makes sense. The market was waiting to see what President Trump said, how the market would respond to it. Is it going to be any detail? And frankly, for me, there was no detail again. It was, again, everything he's going to do, but he did it in a presidential way. And I was very impressed. And I'm obviously one that looks at all this, and so does the market. And the marketplace just said, I like what I'm seeing. He didn't hurt the market, and the Fed keeps saying they're going to raise interest rates. It's not bearish the dollar. So up and away the dollar went. You put it all together, you got an interesting day and interesting game plans. And we talk about that with Modern Trader and their technical tips from the pros. These are the articles in this particular PDF we've put together for you from them. The Gantt square of 9, what does it mean? What about how do you use some of these oscillators? They're talking relative strength. I love, as you know, the slow stochastic, but the concepts are all the same. Optimizing stops, very important because that is the key to holding your money together when you're wrong or locking in a profit sometimes. Call us. Go to our website. You'll see a carousel of free offers. You can click right up here if you're watching me on YouTube or under us on many of the websites. We'll email this right out to you. I'm Ira Epstein. You have a great trading day, and I'll talk to you all tomorrow.